Good morning, everyone. Thanks for joining in. So today we have Natasha. She works at CalHFA. She uh, does all the training there. As far as let's see, well, what do you do? Just mostly training for brokerages and LOs on CalHFA, or do you do other training there as well? Oh, let me hit my.
So I pretty much I am a trainer, a lender training program analyst for CalHFA. I conduct trainings on for mortgage brokers, lenders, nonprofit agencies. I also do home buyer presentations. Just about, training any entity that's interested in our down payment assistance program. As you know, it's very costly in California, and folks just need, a little extra money to help them with realizing the dream of homeownership.
I agree.
So, on anyone that needs the education, I am there, helping them understand the many programs that are available to them.
Awesome. So, and there is a pretty good variety there. We do CalHFA on our mortgage division side. Great programs. I've never really had any issues with going through CalHFA. The rates are usually very, very competitive. But I thought it would be good to have you come on and speak with our real estate team, since a lot of times they are kind of the first line when sparking up a conversation with a potential buyer. And, a lot of buyers just don't know about programs like CalHFA. And I thought it'd be good to kind of, I guess, give a little bit more than just the basics of how the program works. Turn times. I know, if you've been in the business for many, many years,
Oh,
maybe back in the
oh no,
day.
there's a glitch in the.
Oh, oh. Here, let me turn off my video. All right, am I back? Okay.
Yes, you are.
Yeah. So, I know there are some misconceptions on turn times and how long it takes to go through CalHFA, but truthfully, I have not experienced that on my end with processing these. So, I'm just gonna go ahead and turn it over to you so you can kind of give us a rundown of how this works, qualifications, why it's good for buyers, and all that.
Absolutely. And thank you so much for inviting me to spread the word on our programs. This presentation is a condensed version of what we offer. However, I highly encourage you to sign up for one of our in-person lender training classes if you have time. They generally go for about 3 to 4 hours. And we travel all over the state of California. So this presentation today is very condensed due to the time constraints. But on our screen here, you will see CalHFA, our logo. You see some important contact numbers. We also have a lender training mailbox where you can send emails if you have scenario questions or need help navigating throughout our website, or you can call me at the end of the presentation. You will all have my contact number and email address. For those that are new to CalHFA, I highly encourage you to visit our website, which is calhfa.ca.gov. Visit our website, sign up for e-news alerts. There are times when we make changes to our program requirements, or there are even times when we come out with new programs. So you want to make sure you're in the know with what programs are current and what the requirements are. You want to make sure you're in the know. You're the first to know. So please visit our website, sign up for e-news alerts, and I'm going to repeat that again throughout the presentation because I want to make sure you're signed up. But let's get started. So, who is CalHFA? CalHFA, we are the California Housing Finance Agency, and we were founded in 1975 to provide special financing and down payment assistance to help low to moderate income Californians find a place to call home. As I mentioned in the beginning of the class, it's very costly. Folks are having a hard time setting aside money just to save. Not alone, also they're having a hard time setting aside money to save for a down payment and closing costs to purchase a home. And that's where CalHFA comes into play. We have the special financing programs and down payment assistance programs to help individuals meet that down payment requirement so that they can get their foot in the door to home ownership. You all know that home ownership is the fastest way to build wealth. And we encourage that for homeowners for individuals throughout the state of California. Um, our goal at CalHFA is to increase affordable housing throughout the state of California for all people to have a place to call home. You will note that CalHFA, we are a self-funded state agency, meaning the programs that I'm going to talk about today, there are specialty programs where we do not rely on the state's general fund to offer these programs. However, there are times when we do get funding from the general fund or Senate bills to offer specialty programs such as the Dream for All program or the accessory dwelling unit grant program. Those programs are no longer available, but those are examples of specialty programs that we offer from time to time, and we have limited funding for those programs. But the programs that I'm talking about today are My Home Assistance and our Cal Plus Zip program. Those two programs are our standard programs, and we don't run out of funding on those particular programs. But in a nutshell, this is who CalHFA is. We are not a lender. So a home buyer that's interested in our program cannot come to us to apply for these programs. We rely on a network of brokers and lenders to offer our programs to a first-time home buyer that meets our definition of a first-time home buyer and our requirements. But let's get into the programs that we currently have available today. So, our first program is our My Home Assistance program. Now, this is our tried and true program. This program is a very unique program because it works with all programs that we have available today. And it also can be used to cover either down payment and or closing costs. It just depends on how you structure the loan. Now, our My Home Assistance program, it's a silent loan on title. So when your client is in this loan, they do not have to make a payment, monthly payments. There's no monthly payments required when your underwriter is qualifying the client. He or she doesn't need to hit the client with a payment on the My Home Assistance program. Now, on My Home Assistance, your client can either borrow 3% or 3.5% of the purchase price or appraised value. That's how you will identify what the loan amount is on the My Home Assistance. It's dependent off of the lower of the purchase price or appraised value. Now, My Home Assistance, it is a loan. It's not a grant and it's not forgivable. So you want to make sure you fully understand that, and you want to make sure that you are communicating this to the borrower. A lot of times, borrowers will get into this type of program, and because they don't have to make a payment, it slips their mind that this is even a loan. But it is a loan. It's a loan that they will eventually have to pay back. And they'll have to pay it back when one of the three items occur. So if they refinance on their first mortgage, they'll have to pay back the My Home Assistance Program plus a small portion of accrued interest. If they decide to sell their home, they will have to pay back My Home Assistance plus any accrued interest. Or if they decide to stay in the home, do nothing, and wait 30 years, when they go and make their last payment on that first mortgage, they will have to pay back the My Home Assistance Program. Now, I did mention there's a small amount of interest that accrues on the My Home Assistance Program. And guess what? It's only at 1% simple interest. So let me give you some numbers to help you put that into perspective. So let's say your client utilized our My Home Assistance Program and they borrowed $20,000. How that 1% interest would accrue on that $20,000 loan would be in the first year, it would be $20,200. In the second year, that balance would increase to $20,400 and so on. So it's simple interest, very, very small amount of interest that's accruing on that loan. There's no prepayment penalty. So if your client decided to make payments to the My Home Assistance Program, they can and they won't get penalized. They totally can do that. They're not required to because remember, the payments are deferred and it's a silent loan. Now, the unique thing about our My Home Assistance Program is it can be combined with any first mortgage. So you would be using our first mortgage interest rates, but if you are qualifying the client on a conventional loan, you're going to follow Fannie Mae Home Ready guidelines. If you're using our FHA first mortgage, you're going to be following the FHA guidelines on that first mortgage. If you have a veteran and you're wanting to do a VA loan, My Home Assistance can be combined with a VA loan. Same with USDA loans. That's a loan for anyone looking to purchase in a rural area. And I know some of you are scratching your head wondering, wait a minute. VA and USDA, they offer 100% financing. Why would I use your My Home Assistance with those two programs? And you would do so to help cover the closing cost on a VA or USDA loan. Keep in mind, My Home Assistance can be used to cover down payment and or closing costs. It just depends on how you structure the loan. Now, when you are utilizing any of our programs, we allow you to follow their first mortgage conforming loan limits. We don't have a loan limit on My Home or a purchase price cap on My Home. We allow you to follow the loan limit set by the first mortgage. So, as an example, on a conventional first mortgage, if there are certain counties throughout the state of California where the conforming loan limit will exceed the 766,550 conforming limit. And we're okay with that. Just on a conventional loan, if the loan amount exceeds 766,550, the loan to value on the first mortgage is capped at a 95% CLTV. And a high balance fee is assessed to your client as a closing cost fee. So keep that in mind when you're doing a conventional loan. But if it's a traditional conforming loan limit, you can go up to that 97% loan to value and layer the My Home Assistance with that conventional first mortgage. My Home on a conventional VA or USDA is calculated at 3% of the of the purchase price or appraised value, whichever's less. Now on a FHA first mortgage, The My Home Assistance program will go up to 3.5% of the purchase price or appraised value, whichever's less, because the FHA first mortgage will go up to that 96 and a half loan to value. For FHA, if you're purchasing in a high cost area, there is no cap to the loan to value, so that's pretty good. On a VA loan, we did cap the loan amount on a VA transaction to 1.49 million. It's the max of the conforming loan limit. But you're simply going to follow the loan limits per the high cost area counties when you're doing a VA loan. And for a USDA loan, you're following USDA loan limits with those type of mortgages. Um, and the beauty of our programs, because we get it, we know that the cost of living in California it's expensive. It's high. It's at an all-time high. We get it. So you can layer other down payment assistance programs, other grant programs with our down payment assistance. For the most part, the max combined loan to value of all liens on title would be 105 CLTV, and that's combined loan to value. Um, but you can, and if you are layering other grants or other community seconds with our program, we ask that our liens take a first lien or a priority lien position on title. So please keep that in mind. But our My Home Assistance, it is a loan. It's a silent loan on title that the client doesn't have to make payments, but they will eventually have to pay the loan back should they refinance, decide to sell their property, or at the end of the 30-year term. Your client can combine any money or any gift funds that they have with our My Home Assistance program to offer a larger down payment. This will help with lowering their monthly mortgage payment. So keep those things all in mind. Our next program that we offer is our Cal Plus zero interest program. We often call it our Cal Plus ZIP program. And when this program, when you are looking at this program on our rate sheet, think of this program as built-in closing cost assistance. With this, there's many ways that you can structure the loan, but you will notice that the Cal Plus ZIP program is only available on a conventional first mortgage or an FHA first mortgage. We do not offer the Cal Plus ZIP on VA or USDA. Um, and it's built-in closing cost assistance. I think the best way, if you're going to use this program, is to add the My Home Assistance with this program. So you'll have either a conventional first mortgage or an FHA first mortgage, whichever your client qualifies for. But that first mortgage, you'll have that first mortgage and first lien position. Then combining our My Home Assistance program with a Cal Plus ZIP would put My Home Assistance in a second lien position. The ZIP program is a third lien on title that's there to cover the client's reoccurring and non-reoccurring closing costs. Now, how do you calculate the loan amount for the ZIP? You have an option to use either 2% or 3% of the first mortgage to calculate the loan amount for the ZIP. Now, I want to make sure that you are all aware that the more assistance a client needs at CalHFA, the interest rate on the first mortgage will slightly be higher. So in my first slide, I mainly talked about My Home Assistance being combined with one of a first mortgage. Here, this Cal Plus Zip program is allowing your client to get down payment assistance and closing cost assistance. So that can slightly increase the interest rate on the first mortgage. But the Zip loan, it has zero interest. So if they need closing cost assistance and they have that third lien on title, the interest is at 0%. So there's no interest accruing on that third lien. The payments are deferred on the Zip program, but you have to make sure if you're offering this program to the client that that Zip third lien is strictly used to cover closing costs. It cannot be used to give the borrower cash back in hand. It cannot be used to pay off debt. It is strictly for the closing costs. So that's huge here. But again, if you're using our Cal Plus Zip program and you're combining our My Home Assistance with that program, um, as an example, with those three liens, your client could roughly get 102% combined loan to value. So that they're getting over 100% financing to help them get their foot in the door to home ownership. And this program can also be layered with other grants and down payment assistance programs that doesn't mind taking a junior lien position behind our liens. So please keep that in mind. But the ZIP loan, it is a loan. It's not a grant and it's not forgivable. If your client refinances on the first mortgage or decides to sell their property, or even at the end of the 30-year term, they will have to pay back the ZIP lien or and the My Home Assistance lien if any one of those events occur. But it's strictly it work we it's very similar to how I communicated the My Home Assistance, except for remember, My Home Assistance can be used for down payment and or closing costs. The Zip lien can only be used for closing costs. Now, I'd like to give you some figures so that you can put this all into perspective so that you can visually see how these programs can help your clients. So, here's a scenario that I came up with. Let's say your client comes to you, they're looking to purchase a home. You find that their price point that they qualify for is putting them at a purchase price of $600,000. On an FHA first mortgage with our My Home Assistance program in second lien position, in this scenario, this is how this program can help your client. They are essentially getting 100% financing. So, the first base loan amount on an FHA loan would go up to $579,000. Our My Home Assistance program would go up to that 3.5% of the purchase price or appraised value, giving your client a $21,000 second lien on title. Their estimated monthly payment at a 6.5 rate is $4,764. I know this is low, but I estimated the closing costs at 2% of the purchase price, and that came up to $12,000. Let's say that your borrower was able to get a seller credit or a seller concession at 1%. That would help reduce the closing costs that they would have to bring in for closing. Total amount due estimated in this scenario would be 600,000, I'm sorry, $6,000, not $600,000, but borrower would be estimated to bring in $6,000. We often get questions about, well, there's a change with the realtor or the buyer's agents commission. Can clients use our down payment and closing cost assistance programs to help with paying for that fee. And we often say if that buyer's agent's commission is truly a closing cost and it's something that's disclosed on the closing disclosure as a closing cost, absolutely our down payment and closing cost assistance programs can be used to help absorb some of that cost. Now, it won't pay for everything because with the purchasing of a home, there's a cost associated all over with the transaction. Because on our loans, this is a buyer paid compensation loan. So what the brokers charge on our programs, it affects the origination. It has to be disclosed as origination costs, which affects the closing costs. So if you're adding in title fees and you're taking an aggregate of all those fees, our down payment and closing cost assistance would not cover all fees. But if you combined our assistance with, let's say, a small seller credit, that can help minimize the closing costs for your client purchasing that home. But this is the first example of how our FHA program combined with My Home can help your client meet the down payment requirement when purchasing that home. The next slide here is our Cal Plus Zip program at 2% with our My Home Assistance combined with this program. So on this program, your client will have an FHA first mortgage. Our My Home Assistance is in a second lien position covering the down payment requirement. And you have the Zip in a third lien position covering a portion of the closing costs. So it's the same figures. You have the same purchase price, same loan amount on an FHA. My Home is coming in at 3.5%, which is covering $21,000, meeting their down payment requirement. The ZIP is calculated at a 2% loan amount, which equates to $11,782. Now, I mentioned when you add our Cal Plus Zip program, the interest rate is slightly higher, and the interest rate is at 7.75%. But some clients have the income, they make the money and can afford this interest rate, but just don't have the means of having a savings account to come in with that down payment or closing costs. And this is how that program can serve those clients. Their monthly payment, principal PITIA, that's principal, interest, taxes, and insurance, is calculated at $5,261. I estimated the closing costs at 2%. I know that's very low, and that's coming in at $12,000. Essentially, on this program, because the ZIP loan amount is at $11,782, that ZIP loan amount would essentially absorb a lot of the closing costs that the client would need to bringing in their estimated contribution or the funds that they have to bring in to $218. And that's not even including a seller credit. So I just want to make sure because I know that this is a broker call. What's gonna set you apart from all the competition out there on offering our program is your service, your level of service that you provide to the client, and your array of options that you have because you have it all. You can submit to various lenders and offer them various products to help meet their needs. But on our CalHFA program, it also goes down to how much you set to charge on this loan because this is a borrower compensation program where what you charge isn't built into the interest rate as a rebate. It's actually affecting their closing costs. So keep that in mind. But again, there's ways to absorb what you charge to help them get into the program. As I mentioned, you can combine grants to help with some of the closing costs, other community seconds. So there are ways to absorb the closing costs when you're building in your origination. But let's get to the requirements. I talked about the programs. I explained our My Home. I talked about our Cal Plus Zip. what are the requirements of the program? So we do ask that the borrower have a minimum credit score of 640 when you're offering the government programs. That's an FHA, VA, or USDA. We ask that their minimum credit score is at least 640. I know that if you're not using CalHFA, you can go a lot lower. We are just at a standpoint to where they have to have that 640 credit score. Now, if you're offering a conventional loan using our first mortgage, and you're following Fannie Mae Home Ready guidelines, we do not allow Freddie Mac. If you're on a conventional loan, the minimum credit score is 680. We will go down to a 660 credit score for anyone that's considered low income. And I'm going to explain that in a bit on the next slide. The max debt to income is a hard stop at 45% if their credit score is below 700. Now, if you have a client that has a 700 or above credit score, we will allow a 50% DTI, and that's a hard stop. So there's no exceptions to the debt to income ratio. So if your client is a hair over at 45.01, we do not offer exceptions on the debt to income requirement. But guys, there's ways to structure and make that file fit. If you're doing a conventional loan, we will allow single premiums or split premiums. And when I say that, that's where your client is buying out the MI. And it would take for you to get an MI quote from whatever lender that you're submitting this transaction to. But you can buy out the MI to reduce the debt to income, or you can have the client pay down debt to reduce the debt to income ratio. There's multiple ways that you can structure the loan to help them meet the program requirements. We even allow permanent rate buy downs, and that's where your client can buy down that interest rate to an affordable payment for them. And we'll talk about that a little later. But those are our debt to income requirements. On a CalHFA program, we have our definition of a first time home buyer rule. And our definition is no ownership interest in your primary residence within the last 3 years. So keep this in mind. You might have individuals that own a property and it's an investment property and it's only one property. They could potentially still be considered a first-time home buyer. We would need additional documentation if there's a history of them owning a home. Acceptable documentation would be either a verification of rent from a qualified property management company, or I'm so sorry. My my printer this came on. So sorry about
You
that.
can't hear it. It's okay. Yeah.
Okay. We do have, so for the first time home buyer requirement, if your client owns an investment property, one investment property, but they haven't lived in that investment property within the last 3 years, we would ask that you provide one of the three items, and that's either a verification of rent from a property management, proving where your client is living or renting from, separate from that investment property that they own, or they could provide cancel rent checks for 3 years, or a 3-year utility bill history showing where they've had utility service that's separate from the investment property that they own. So keep that in mind. But if you have a true first-time home buyer, there's no need to provide that additional documentation. This is only when your credit report has a history of your client owning a property within the last 3 years. So for those individuals or that co-sign for a mortgage, keep in mind, you have to ask that question. If you co-signed for a mortgage, have you lived in that property within the last 3 years? If the answer is no, Okay, they may be considered a first-time home buyer, but they will have to provide additional documentation to show where they currently pay rent. And we're very specific on the particular documentation we will accept. Now, for when you're using our CalHFA down payment assistance or closing cost assistance program, your client does have to complete the homebuyer education course. It is important that if you know that your client is going to use one of our programs, that they complete the course early in the process. I can't tell you how many times I get calls from folks that wait till the last minute. They wait till when the loan is about to close and they need docs immediately. You do not want to wait that long. You want to be proactive, right? When your client comes to you and you're collecting their income documentation, pull in their credit, and you've decided and you know that they fit the program guidelines well before they locate a property to purchase, you want to make sure that they know to complete the homebuyer education course early in the process. Please make sure that they're using the links on our website to register for the homebuyer education course. And make express the importance of completing this course to them because it will help them become a successful homeowner. It explains topics about how to budget. It explains what true home ownership is after the loan closes and you're well on working on your next transaction. So please make sure that they do that early in the process. After they complete the course, they will receive a certificate. The certificate is good for 1 year. And once they receive that certificate, they need to provide a copy of that certificate to you so that you can submit that in your compliance review file when the file is submitted to CalHFA. But we only require one borrower on the loan to take the homebuyer education course. We have about 3 options available for your client to take the course. But guys, I can't stress it enough. Do not wait to the last minute to have your clients register and complete that homebuyer education course. And I also want to let you know that we do not accept certificates from frameworks, and I believe that's through Freddie Mac, and we do not accept the certificate from Fannie Mae HomeView. So if you want to avoid those issues, please make sure you're using the links on our website to have your client sign up for the course. Now at CalHFA, we have very, very moderate income levels because I believe CalHFA, we get it. We know that folks need to make money to afford the prices in California. Now, here is a condensed version of all our income limits throughout the state of California. Our program is available in all 58 counties in California. You just have to make sure all borrowers on the loan are within the income limit for the county in which the property they're purchasing is located. So if they're purchasing in Fresno County, the income limit for Fresno County is $174, $174,000. If their income is at or below that amount, they're within our income limits. If your client is looking to relocate to Sacramento County, Sacramento County's income limit is $225,000. And they're very moderate income levels. We do from time to time change our income limits. They can increase, they can decrease annually. So you want to make sure you're visiting our website. You're signed up for e-news alerts so that you know what the limits are when you have that client sitting in front of you, and you want to make sure you're within the program limits of our programs. But these income limits are specific to our My Home Assistance program and our Cal Plus Zip program. If you have any clients that luckily received a Dream for All voucher, keep in mind Dream for All has its own income limit. So keep that in mind if you I know I have brokers, I have some realtors on real estate agents on the call. You might get those individuals that receive the voucher, but Dream for All has its own income limits. But yes, now earlier in the class, I mentioned that on a conventional loan, we will go down to a 660 credit score for conventional borrowers if they're considered low income. And basically, how we determine if your client is low income is if they earn 80% or below the AMI, 80% AMI income limit. So basically, you want to go to Fannie Mae's area median income lookup tool and type in the property address of the property your client is purchasing. You will get to this page and you want to focus in at the 80% AMI income limit. If your client is at or below, they're considered at or below the 80% limit, they're considered low income, and there's a few benefits that they will receive from CalHFA on this program. So they will get to have a lower credit score. They also will have a lower interest rate. They also will even benefit from having lower MI coverage. And I can tell you, as an example, if your client is purchasing a home on a conventional first mortgage, they're low income. The loan to value is at a 97% loan to value. The MI coverage for a low income borrower is about I believe it's 18%. Whereas if they're not low income, they would go up to that 35% MI coverage. And that can make a big difference in someone's mortgage payment because their monthly MI payment would be a lot higher versus someone that's low income. So always go out to this website to confirm whether or not your client is in fact low income. In this example here, I typed in our address in Sacramento, and for Sacramento area, the 80% AMI limit is $90,960. But please do not look at that at the 100% or the 50%. You exclusively want to focus in on 80% AMI when you're determining if your client is low income or not. But please look that up. And that's only for conventional loans. Now, we do have property requirements at CalHFA. They're very few, but these are requirements that you need to keep into consideration. Um, CalHFA at this time will only lend on a one unit property. So that's either a single family residence, it could be a condo, a townhouse, but it cannot be identified as 2 to 4 units. We're not there yet. So keep that in mind. But we will allow that single family residence to have an accessory dwelling unit. It could have a granny flat unit. It just, when the appraiser goes out to appraise the property, they have to identify that property as a one unit property. Anytime the appraiser mentions that that accessory dwelling unit it has its own address or has its own address, whether it be B, known as having a symbol as B or a half address, that will make that property a 2 unit, and our system isn't ready to um, accept uh, 2 unit properties at this time. Now, on a CalHFA program, you must make sure that all borrowers on the loan intend to occupy the home as their primary residence. We do not allow investment properties. We do not allow non-occupying co-borrowers or co-signers on our loan. All borrowers on the loan must live in the property, and they're the only ones that can take title to the property on a CalHFA program. we will allow manufactured homes. And I think that this is a great affordable option to home ownership. Just please make sure if you are doing a manufactured home on our program that it's on a permanent foundation and it's considered double wide. Now, with our program, we do require the client purchase a 1 year home warranty. And that can be something that's paid by the seller, the buyer, or the lender. We just need to make sure that that 1 year home warranty is there in purchase. And it only needs to be a basic 1 year home warranty that covers stove and oven, HVAC, and the hot water heater. But it's there to protect the client that first year of home ownership. We do waive the 1 year home warranty on new construction properties because, the builder has their own 1 year home warranty. So keep that in mind when utilizing our CalHFA program. Now, I talked about our programs, I talked about our requirements. So how do you, as a broker, what do you need to know? How do you submit the loan to CalHFA? Well, as a broker, you're simply going to originate this loan just like how you would originate any other program. You're going with a CalHFA program. I want to make sure that you are collecting and having your clients sign our specific forms that we require. The first form is our borrower affidavit form, and your client is simply just attesting that they meet our first time homebuyer rules, that they're going to occupy the property, and they will have a 1 year home warranty. This is a form that you're going to have all borrowers on the loan sign. It could be e-signed or wet signed, but it just has to be completed and in the file. And you want to make sure you're using the most current form when you get that signed. Our next form is our state reporting disclosure. This is completely informational. They're signing the form, asking a few questions, answering a few questions. They can answer or decline to answer the questions on our state reporting disclosure. And then we also have our ZIP interest rate disclosure. This is just acknowledging that ZIP loan, it is a loan. That ZIP lien, it is a loan. It's not a grant, and they only can use the funds on that program to cover closing costs. These forms can all be e-signed or wet signed, but they have to be in the file. So you want to make sure you're collecting that early in the process, especially after you've identified a property that the client will purchase. But you're simply going to follow our submission checklist. That our checklist is housed on our website. Take a look at that form so that you know what items we need in order to approve the loan so that the loan can, so that docs can be sent to title. Take a look at that checklist. But what happens is, as you're collecting all these conditions and getting the client pre-approved, you are not submitting the file to CalHFA. You, as a broker, you're going to submit the file to an approved CalHFA lender who offers our programs wholesale to mortgage brokers. That's how you have access to our programs. So it's like a third party. You don't have contact with CalHFA, but we're always here to help. I'm always here to help. I'm always here to help answer any questions that I can to help better serve you. But you're submitting that file to a CalHFA approved lender, and I can tell you now, we have close to 25 approved wholesale lenders, and we'll take a look at that in the next few slides. But you're submitting the file to them, and they in turn they'll do the underwriting on the file, make sure everything is in compliant and you're meeting our guidelines, and then they submit to CalHFA for that compliance review. I'll talk about turn times a little later. Our turn times are great, I think, because, people think that you're submitting this file to a government agency, your file's going to get lost in the sauce, you're not going to know anything, you're not going to have any information of where your file is going to be stuck in la la land, and that's just not the case. Our team is very dedicated, efficient, and they're reviewing these files quickly as possible. I tell all folks to add at least 3 to 5 business days on their normal origination process. But I know today, as of today, our current turn time, we're within about 24 to 48 hours with getting an approval issued on for the compliance review. But I'm always, trying to, add more time, just so you can prepare because things happen. And you want to make sure that you're able to communicate effective timelines and meeting your close of escrow on all transactions. You can close these loans within 30 days. So don't think that this is like a 50-day closing that's going to take place because you're having to submit or the file's being submitted to CalHFA. We're not doing a re-underwrite of the file. We're only looking at a few compliance items, such as first-time homebuyer definition, making sure our forms are in the file, and making sure the income limits are within our program requirement. But we are not looking at paycheck stubs. We're not looking at tax returns. It's a simplistic list of items that we check for. But our next slide is our website. So a lot of great information on our website. Again, guys, at the top of the page, you'll see this arrow here. I don't know if you see my arrow gauging at the envelope icon at the top of the page. Please take time to sign up for e-news alerts. We release a great information. It's not overwhelming. I even have alerts coming to my cell phone as well as my email address. Please make sure that you sign up for e-news alerts. But on our homepage of our website, the section that you will most focus in on is the red box where it says lenders and real estate agents. There, it's a ton of information throughout those links, but I want to draw your attention to the left of that box. You'll see there's a small red box hovering over home buyers. That's the link that you'll click to have your home buyers go to sign up for our home buyer education course. Three links available for them to sign up. The most popular option is through eHome America. So make sure that they're using the links within our website to get to eHome America. So there's no issues with them signing up for their course. But just for the purposes of time, if you click on lenders and real estate agents, you'll be then taken to this section of our website. You, as a mortgage broker or real estate agent, you have access to view what our current turn times are. This snapshot is old. So this isn't we're not working on files submitted November 1st. This is old. We are actually working on files submitted on November 14th. The section of our website changes throughout the day, so I encourage you to visit if you just want to take a look at what our current turn times are. As of today, we're currently working on files submitted November 14th. So that's putting us at a 24-hour turn time on getting files reviewed and approved for the compliance review. Now, I did mention to you that as a mortgage broker, you're submitting the loan to a CalHFA approved lender that's approved to offer our programs to you wholesale. And you can view that list by clicking the mortgage brokers link that I highlighted on this screen. If you click that link, you'll then be taken to this section of our website. Now, there's more lenders listed on this web page. We have Sierra Pacific, PRMG, Kind Lending, We have a lot of wholesale lenders that are approved and ready to get your business. So get approved with a handful of lenders there because they may offer different programs. One may not offer FHA or VA. Whereas another would. Some may not offer VA or USDA. I know Loan Simple, they offer VA, USDA, FHA, and conventional on a CalHFA program. So please give them a call, check to see who you are approved with and can offer CalHFA programs. Um, our next slide is as we come to an end, why CalHFA? So I mentioned CalHFA, we offer down payment and closing cost assistance programs. Aside from providing your client with a down payment assistance, closing cost assistance, there are some great things about CalHFA. Um, Keep in mind, our rates on our rate sheet is at par pricing. There's no hit to the rate. So, say if you have a client that's purchasing a condo or a manufactured home, or they have a lower credit score that's within our program requirements, there's no hit to pricing. There's no loan level pricing adjustment. So I think that's a huge that's a huge item because in this market that we're in, clients are rate conscious. They want the lowest rate possible. And you might find that certain days our interest rate might be a little better than other programs that you offer. Now, some folks don't know this, but you can use our first mortgage by itself without our down payment assistance and receive a lower interest rate than what's available to you in the market. When you are just only using our first mortgage by itself without our down payment assistance, we waive the first time homebuyer requirement. So that's a good point too to make. Also, we allow temporary buy downs and permanent buy downs on our programs. I don't think that this is mentioned enough, but you might have a client that wants to buy down the interest rate. Keep in mind when you're doing a permanent rate buy down, that's increasing their closing costs because they're buying down that interest rate to an affordable rate. So explore those options. We do offer temporary buy downs. But as a mortgage broker, since you're submitting to a CalHFA lender, you need to confirm with them on the process for temporary or permanent buy downs because you're going to meet their requirements on that. And our income limits are very moderate, and you can purchase in any county. Your client can purchase in any county throughout the state of California. There are often down payment programs that are tied to a specific census tract. Our program is available throughout the entire state of California. So, and our income limits are very, very moderate. But in a nutshell, I think our program is one of the top programs out there available to assist home buyers with purchasing their first home. I think CalHFA is great. Our turn times are great. And it's an easy process. This is easy. We are not re-underwriting the file and making it difficult to follow our program requirements. I encourage all of you to sign up for e-news alerts and attend one of our in-person training classes. This was a very basic review of the programs that we offer. But there's so many ways that you can use that My Home Assistance program. Like on an FHA program, we allow limited 203K, which allows your client to finance the renovations needed to purchase that home. So that I didn't cover that because that's a lengthy topic, but I thank you for having me. If you have any questions whatsoever, please type your questions in the comment section and we will take any questions that you might have.
Yep. And something when it comes to the rates, I've noticed that CalHFA has been real competitive with FHA and things like that. Um, I wanted to bring you on, especially in front of our real estate team, to just show, that there are options out there for a lot of home buyers. One of the biggest barriers to entry into the home market is just that down payment. A lot of these, a lot of our clients make the money to
Right.
afford the mortgage. It's just that down payment, is where a lot of them kind of fall short. And so this is a great loan to reach out to your clients who maybe have that. They really want home ownership, but they're just not saving fast enough or whatever it is, and talk to them about, CalHFA because we use this quite a bit. We're approved with at least five or six of the lenders on your list as on our brokered our mortgage division side. So we do these loans. We've gotten a lot of uh, home buyers into properties, and they're benefiting because the appreciation rate in California is so great. Even if they do have to pay back that small amount because they do a refi or something like that, they've already made more than that in appreciation usually. So, um, and if you were looking at the income limits, I saw San Diego on there for like 238 or something like that. I mean, that's a pretty good salary. That's um, I don't know if that's average or whatnot. Well, I guess it's median, right? So, that it opens it up to a lot of people. It's not necessarily just low income. So I think that can be some of a stigma with this. It could be used for just about anybody that needs just a little assistance with the down payment portion to get into their home and, start building equity.
Absolutely. I agree. And thank you.
So I don't see anything in the chat. So I think you covered quite a bit of it. Yeah, thank you for coming on. Um, we'll have this recording in our back office for those that missed it, but I think it was good information for a lot of the real estate team to hopefully open up some conversations, especially over the next couple months when the volume tends to dip down a little bit. Maybe prep your buyers for a purchase here in the next few months and let them know about this program. And it's open. It's pretty easy to qualify.
It's
So
very easy. It's
yeah,
so easy. Just the origination process of it own, it's easy. It's not convoluted. It's not like it's a very easy process and it's so easy to qualify. Uh, we reduced the headache because was a time where it was hard to submit a file to CalHFA, but we made things a lot simplistic to help folks get these loans done and to help increase homeownership throughout the state of California.
yep, I agree. So most of ours have been running 30 days or less. I mean, it's a pretty normal process. So
Right.
all right, well, thank you for
Thank
coming
you.
on. That was super educational, and hope you have a great week.
Thank you.
And I'm sure we'll be in touch. Okay,
All right. Take care.
see you later, everybody.
Bye.
All right, bye.